So here's everything you need to know about switching from your Advantage plan to a supplemental plan. I'm going to give you some details here. First off, what are the reasons that people would switch from Advantage to a supplemental plan? Well, there are several. Number one is that you're still healthy, but you're maybe concerned about some things. Maybe some things that your siblings are experiencing, or maybe some things your parents had struggled with from a health perspective, and you're concerned about those. Now, those are not issues you may be dealing with right now, but you are concerned about that. In order to make the switch, you do have to still be healthy, but again, you may be concerned about something in the future, and so you're ready to make the switch. Secondly, you want to reduce the risk. Right now, you are on Advantage plan, and therefore you're responsible for an annual max out of pocket. Whenever someone has a serious health issue, it gets cancer or heart problems, whatever, it's very likely that they're going to max out. Those max out of pockets right now are going to range anywhere from about $3,000 to $7,000. This next year, the limit will be $8,950. Not every plan is going to have that, but again, when you're on an Advantage plan, your risk is that annual max out of pocket that resets every January. And so you come to a place to realize, I just don't like the risk of those annual max out of pockets on my Advantage plan. Again, that's a legitimate concern for sure. And then number three, you're preferring to pay premiums versus copays. Now, when you first went on the Advantage plan, it was probably just the opposite. In other words, you were fine not paying a premium for that plan, but rather just pay copays as you go. So now you come to a place where you've decided, hey, in case I do have some health issues, I'd rather go ahead and pay a premium and not have any kind of financial surprises. Most people today are getting a G plan, and the only thing out of pocket beyond your premiums to the insurance company would be a very small Medicare B deductible. And so in other words, you're ready to get rid of the risk, and you're ready to transfer the risk of all those copays and co-insurance and excess charges, all those things. You want to transfer those to an insurance company, so you'd rather pay a premium to eliminate that risk instead of paying copays as you have been on your Advantage plan. And then number four, network issues. Now, sometimes on Advantage plans, you see your network shrinking. In other words, sometimes doctors stop taking the Advantage plan, or maybe a specialist you want to see does not take the Advantage plan. And so you're getting concerned about how the provider networks could be altered. And so you don't like that. You want to be able to go to whoever you want to go to when you want to do that. And so the supplemental plan would afford you to do that, because the only thing you have to be concerned about is, do they take Medicare? And that's it. And if you're on Advantage plan, you have to make sure they take your HMO plan or PPO plan, whatever you're on. Certainly there's going to be less choices and less providers. So when you get in the Medicare, original Medicare system, you have a lot more options as far as provider goes, and you don't have HMOs and PPO. Medicare is your network. Then the fifth reason would be you want to eliminate pre-authorizations. One of the negatives about Advantage plans is the fact that about 72% of all the services that someone needs on the Advantage plan is going to have to be pre-approved, or called pre-authorized, by the insurance company. So if I'm on an Advantage plan, the doctor says I need a knee replacement or hip replacement or a CAT scan, an MRI or something, that is going to have to be pre-approved by the insurance company. So doctor orders it, but you're not sure you're going to get that service or not until the insurance company agrees with the doctor's decision. And if they agree with it, you'll get that service. But sometimes they don't. Sometimes they delay those things, or sometimes they just flat deny them and you do not get those services. And so maybe you've come to a place where you say, I don't like pre-authorizations. I don't want the insurance company to have any say-so. I don't want them to have the final say-so in healthcare decisions. I want my doctor and me to make all those decisions. And that's exactly what happens in original Medicare with the supplemental plan. If the doctor says you need a knee replacement or hip replacement or a scan or a skilled nursing stay, end of story. If Medicare says they'll cover it, doctor says you need it, that insurance company supplemental plan has no say-so whatsoever. If Medicare pays, they have to pay. If Medicare doesn't, of course they won't, but if Medicare pays, they will pay. And so you'd rather not be in that pre-authorization system. You'd rather have a greater flexibility, making sure your doctor and you make all the final decisions. And then sixthly, you may want a permanent policy. Advantage plans are not permanent. They're actually only written for 1 year at a time. We call that a contract year, a calendar year. And it's an agreement for 1 calendar year between the insurance company, Medicare, and you. And so those plans come and go. They change. They are tied to a service area, which is basically a metro area. So if you move from one metro area to another, you don't take your Advantage plan with you. You have to get a different Advantage plan and enroll into a different network of providers. And so when we take a supplemental plan, it is permanent. In fact, the wording on the supplemental plan, it says it's guaranteed renewable. Your only obligation is to pay the premium. As long as you're paying the premium, that policy will be yours for the rest of your life. They can never cancel a supplemental plan other than non-payment of premium. And so if you move, take it with you. If you're 95 years old, it's still your policy. If you have a lot of claims, it's still your policy. So you can't lose a supplemental plan other than non-payment of premium. So regardless of age, location, claims, that policy will be yours. So you never have to worry about losing that like you could on an Advantage plan. All right, so those are really the main 6 reasons why people do consider switching, and these are all very, very good reasons. Now, second detail I want to talk about would be the time for switching from the Advantage to the supplemental plan. You actually have 2 different times in the year in which you can do this. The first one is October 15th through December the 7th. And when we make that switch during these 7 weeks to get off the Advantage plan and move to a supplemental plan, what will happen is our supplemental plan will go into effect January 1 of that year, okay, of the next year. And so there's a second time in which we can move Advantage to a supplemental plan, and that is the first quarter of every year. And this would be January 1 to March 31. As long as we are on an Advantage plan on January 1, this gives us the opportunity to be able to switch back to original Medicare and get a supplemental plan. And the way that would work is if I make that decision to switch in January, my policy goes into effect, my Med Sup plan goes into effect February. If I make the switch in February, that policy, a supplemental plan would go into effect March 1. If I do the switch in March, of course, as you can see, it's going to go into effect in April. They call this right here, this first quarter, the open enrollment period. And this is switching Advantage plans to supplemental plans. And they call this one the annual election period, October 15th through December 7th. So if you want to make the switch, it's got to be during these periods of time. Now, the third issue is this. What do we need to be considering when making the switch from the Advantage over to the supplemental plan? There are several items here. Let's take a look at them. Number 1, providers. Remember on your Advantage plan, you had to see if your doctor took that Advantage plan, that HMO or PPO. In this scenario here, if we're going to go on a supplemental plan, you just have to make sure that they take original Medicare. You don't even have to ask them if they will take your supplemental plan, because if they take original Medicare, they have to take your supplemental plan. But we still want to make sure that your providers do take original Medicare. In other words, they participate in that original Medicare system. You want to find that out. Then second thing we want to consider is the initial premium. In other words, what will it cost you on a monthly basis? Now, on your Advantage plan, you've been paying your Medicare B premium. If we have a supplemental plan, we're still going to have to pay our Medicare B premium, but we're also going to have a premium to the supplemental plan. Why? Because we've taken almost all the risk of our co-pays and co-insurance and all that, and we transferred that to an insurance company. So for them to take that risk from us to fill in all those gaps, we got to pay them a premium to do that. All right, and so you're going to have an initial premium. What will that premium cost you when you start the plan? Now, most states, your premium is going to be based upon your age and your gender and your zip code. Okay. Now, there are some states where age is not an issue. Anyone that lives in that particular area is going to get the same rate. We call that community rating. But most companies are going to be based upon age, your gender, male or female rates, as well as the zip code where you live, and that will determine your initial premium. Now, listen, please, initial premium matters. In fact, when we shop for Med Sup plans, we're going to look at several different companies, and we're going to look at those initial premiums. But I want you to realize that initial premium can change. In fact, rates do go up. In fact, everything goes up. Even Advantage plans go up. Co-pays go up. Max out-of-pockets go up. So what they can do with a Med Sup plan is they can raise the premiums, and that's going to happen for sure, just simply because of medical inflation. However, there are some companies that tend to raise their rates more frequently and more drastically, and that's why it's very wise to look at the stability of the rates. In other words, as we look at the rate history of that company that you're looking at, I don't just care about where they're going to charge me initially. I care about how has that company performed in the last 10 years as far as rate increases. Again, because some companies go more frequently, more drastically. So we always want to look at the history of how those companies raise their rates, and that is going to vary company to company. Now, here's the way we see this. You can go in a company that's more regional with a small block, less policy holders, or you can go with a nationwide company that has much a larger block. I would rather be in a larger block because then the risk is going to be spread out to more policy holders, right? And I'm not going to feel the pain of so many health issues as I would if I'm in a small group. Now, sometimes small groups are stable. That's because primarily all the people in the group are healthy. So if they're healthy, it'll still be stable. But watch out if you're in a small group that has a lot of cancer and hip replacements, knee replacements. So we like a large group company to spread the risk out. Quick illustration, if I was in the ocean and I'm in a canoe, I can assure you I'm going to feel every wave. That canoe is going to be impacted by those waves. But if I'm in that same ocean and I'm in a cruise ship, probably can't even tell I'm in the ocean because it's going to be a smooth ride, not going to be impacted by that. And that's the way it works here. Smaller groups are going to be more impacted if we have a lot of health problems within the group. A larger group certainly has some impact, but hardly really going to notice that. Okay, so that's why we talk about the stability of the rates, because this is what you're going to care about. Not so much what I pay initially, but what I'll be looking at in 3 years or 5 years or 10 years down the road. So that's why we want to be sure that we're going with a company that's proven to be very stable. And then fourthly, we're going to talk about your prescription drug plan. On your Advantage plan, you had a prescription drug plan that was embedded or included. It was part of the package. It covered inpatient, outpatient, and prescription drug. Not so when we do a supplemental plan. The supplemental plan is not going to include a drug plan. And so you're going to have what we call a standalone plan or a separate plan. Now, the good news about this is we have many to choose from. In most markets, we have anywhere from 15 to 20, maybe 25 different plans that we can look at. When you had the Advantage company chose your drug plan for you. When we have a supplemental plan, we have a separate plan that we get to choose from. We have a separate plan that we get to choose based upon the medications that we take and the pharmacy that we would like to go to, okay? Now, we are going to have a separate premium for that, but again, they're very reasonable. Right now, there's plans as low as $7 to $10 a month. The average is about $30 a month. So we have a separate premium, but we also have the ability to select that plan based upon our meds instead of a company selecting it for us. And the good news is every October 15th through December 7th, this is something that you can change, because drug plans are like Advantage plans in that they're written for 1 calendar year. And so if you need to change plans the following year because you're taking more meds or less meds, you can upgrade your drug plan or you can downgrade the drug plan. All right. So that's something that we have to be sure that you are on the right drug plan if you take a supplemental plan. And then fifthly, underwriting requirements. Now I'm going to pause here and be very clear on this. If you are on an Advantage plan for any length of time, meaning any time over a year, 2, 3, 4, 5 years, if you're on that Advantage plan and you want to move to a supplemental plan, in most states, there are just a couple of exceptions, but in most states now, to make that switch from Advantage to a supplemental plan, there will be underwriting that will be part of the process. What does that mean? That means that in order for that supplemental company to accept you, they have to approve an application. And so part of the application process is we're going to ask you about 25 to 30 health questions. We're going to check all the medications you're taking now or have taken in the last 24 months, and we may need a statement from your doctor. That's the underwriting process. So we gather that medical information and we submit that with your MedSup application, and now that underwriter is going to make a decision whether they're going to approve that policy, that switch, or they're going to deny you. All right, and so there will be underwriting that will be a part of the process. There's so many people that think that they can be on an Advantage plan and switch to a supplemental plan anytime they want, and there's no rules and they can just make the switch because maybe their health is changing and now they're ready to switch. Folks, it doesn't work that way. When you've been on an Advantage plan for any length of time, we're going to have to go through medical underwriting. And that's why if you're still healthy and you want to go on a supplemental plan, it's wise to do it the sooner the better so that you can get that approved. We had somebody just recently that was on an Advantage plan and they were desirous to switch to a supplemental plan. But the problem was they had just been diagnosed with the need for a knee replacement. And they wanted to switch off the Advantage to supplemental supplement because the Advantage company said they weren't going to pay for the knee replacement. They didn't think that was necessary, but the doctor said it was. So now that is in their medical records, the need for a knee replacement. So that supplemental company asked them, in the last 12 months, have you been diagnosed with anything that has not been yet performed, any surgery, any test or procedure that has not yet been completed? And that lady had to say yes to that, meaning it's a surgery that is pending. It's still outstanding. It needs to be done. No supplemental plan is going to take her whatsoever. Had a lady not long ago, actually, that started with an Advantage plan at 65. Her plan was to switch to a supplemental plan at the age of 70. She was very healthy, but here's what happened. Right before the open enrollment season began, actually 2 weeks before she was ready to set up to make this switch, she went to her dermatologist. They removed a mole, and it was cancerous, actually a melanoma. And so because of that melanoma diagnosis, there's no way she can be qualified to get a supplemental plan. Why? Because they're going to ask you, do you have any form of cancer, including melanoma, internal cancers as well? And so now she has to be cancer-free and treatment-free for at least 2 years. Some companies require 3 years or 5 years cancer-free, treatment-free. So again, she is now on the Advantage plan. She's stuck on that because she can't qualify health-wise to make that move. So they don't have to take your pre-existing conditions in most states. All right. And so underwriting will be a part of this decision. So these are things you have to consider. Now, lastly, let's deal with the topic of getting help to switch. Most people do not attempt this alone. They're going to get some type of an agent or broker to help them. And so I want to make sure you're real clear as to who it is that can help you through this process. Number one, you can use what is called a captive agent. And a captive simply means that they do what? They work for one company and only one company. Well, why is that? Well, because they're an insurance agent, but they're an employee of that company. And every large insurance company has its captive agents. Now, the problem with that is that they're captive, meaning they represent a very limited amount of portfolio. They only can write the products that that company is going to write. Now, every captive agent I've ever met always will say, well, we have the best plan, or we're the best company. And they all say that. Why? Because they want you to buy from them. No different than McDonald's. They're not going to tell you to, go to Wendy's to get a burger, or Hardee's are not going to tell you to go to Culver's, to get your French fries. They're not going to do that. They're going to say, we have the best. Do business with us. And that's exactly what happens with captive agents. And certainly not all of them can have the best. And we know that one size does not fit all, for sure. And that's why we and others like us have chose the other model of doing business within Medicare, and that is to be independent broker. Well, why do we do that? Well, because we know one size doesn't fit all. And so what we're going to do is we're going to write for multiple carriers. Now, there is no broker that writes for all carriers. There's some insurance companies we don't want to write for. We've seen how they perform. We've seen their rate instability. So we're not going to write for all for sure, but we're going to write for multiple ones so that whenever we sit down with our clients, whether it's face-to-face meeting or it's over the phone or a Zoom meeting, we're going to make sure that we look at all the companies, and we're going to set those companies side by side, and we're going to make those comparisons. We're going to talk about those companies, their initial premium, but also stability of the rates, all right? And so that's what an independent broker would do. If they're a good broker, they're going to make sure that they represent multiple carriers and give you all those options to make sure that you're selecting the right company for your situation. So there's a couple things I want you to know about these two options. Number one, the plans are the same. We don't create the plan. The insurance companies create the plans. The captive will write for one company, or we're going to write for multiple companies, but the plans were created by the insurance company, not by the agent. And then secondly, the price is the same. No matter if you went with a captive or you went with someone like us, the price, the premium that you pay for that plan is going to be the same. Why? Because the insurance companies set the premiums. We do not do that. And also, as far as the commissions are concerned, you don't pay us anything. It's the agent that it will always be paid by that insurance company, right? So that's why I'm saying the price is all the same. So you can't save any money, nor will you spend any more money, either one of these options. So those things are the same, but there is one thing critically that is different, and that's this. The process that we follow is definitely not the same. And the reason for that, again, they're going to show you a very limited amount of options. We're going to show you multiple options. And the only way that you could figure out all these options is to call every individual insurance company and talk to a captive agent. That's very exhausting. There's a lot of time involved in that. Certainly you may talk to a captive agent that's experienced or another one that's rookie, and so it's going to be very confusing if you follow that system. So as independent brokers, it's one call because we're going to look at all those companies, all the details, all the coverages, and every plan, including cost and the stability of the rates. So that's why we're saying it's a whole different process. In addition to that, if you would give us the privilege to help you and you use our company, we'll also help you get a myssa.gov account, which you need. We'll help you be enrolled in Medicare A and B, which you'll have to do if you're ready for Medicare. Some people want to start Social Security at the same time. Our guides know exactly how to set that up for you properly to do A and B with Social Security. Some of you are high income. You're going to need help appealing your surcharges that come because of your high income. And others of you, you're coming into Medicare beyond 65. So you have what's called the special enrollment period. There's extra paperwork that's involved in that process, and we can walk you through that as well.